We've got Madhavan Menon now joining us, Chairman and Managing Director of Thomas Cook India. I want to emphasize the word India here because Thomas Cook India and Thomas Cook Global, they've got no connection. So he is Chairman and Managing Director of Thomas Cook India. And the reason why I'm insisting on India is because there has been a buzz that the global business of Thomas Cook and the India business of Thomas Cook somehow are connected, and there they are not. So Mr. Menon, good morning. Thank you for joining us. The buzz, rumor, or perhaps the view in the market is that Thomas Cook India is a global company, all global businesses are connected, and that is the reason why a stock needs to be punished given what's happened to UK Thomas Cook. But the reality is different. Why don't you use this forum to clarify that there is no connection whatsoever, and you're the Chairman and Managing Director of Thomas Cook India?
Thank you and good morning, Nikunj. Thank you for giving me the opportunity. First of all, I want to clarify that the Thomas Cook India and the Thomas Cook PLC have been separate entities for more than 7 years. In 2012, Thomas Cook PLC sold its entire shareholding in Thomas Cook India to the Fairfax Financial Holdings Group. We have absolutely no connections with Thomas Cook PLC. In fact, we have not done business with Thomas Cook PLC for more than 15 months out of any of our entities, especially the large ones based in India, be it Thomas Cook India, be it TCI Sita or SOTC. So it is a reality that we are completely separate entities, and I think that I would like to clarify that there is absolutely, I repeat, absolutely no relationship between us.
These are separate. How come the brands have the same name?
Well, at the time of separation, it was agreed that Thomas Cook India would get use of the brand for a period of 12 years, and that period comes to an end at the end of 2024. So in reality, we are well on our way to planning a brand change, and we are ready to execute that over the next couple of years, and we'll wait certain approvals before we do it.
Perhaps very basic questions, Mr. Menon. They may sound simplistic for you, but from a viewer standpoint, they perhaps need to be addressed. Given that a travel company, Cox & Kings, has got belly up, markets are suddenly worried about where Indian travel industry is headed. Are Indian travel companies fully funded? Do they have enough cash on their balance sheet? What is the status with Thomas Cook India? Debt, cash, your receivables, cash flow position, how are things looking?
So thank you, Nikunj. First of all, I think it's very unfortunate as to what has happened to one of our competitors. And unfortunately, the market seems to have painted the entire industry with the same brush. On behalf of Thomas Cook, which I am authorized to talk about, we are in a very solid financial position, and I'll explain this. First of all, we have more than 1,100 crores of deposits and investments in liquid mutual funds. We have debt of approximately 400 crores, which is primarily out of acquisitions, and therefore our net cash position is approximately 750 crores. In addition to this, I would also like to mention that we generate around 250 crores of free cash every year across the various groups in the entity, in the group. And this is likely to go up to in excess of 300 crores in the current financial year.
Right. There's also a concern in the market with regards to the acquisitions that the company has been doing, creating somewhat of a holding structure. That's the perception, and that perhaps you're stretching yourself too thin as a company.
So very honestly, we have acquired a lot of companies, and this has been driven by the opportunity of establishing value within the group. The most recent acquisition is Digiphoto Entertainment Imaging, which is indirectly related to the travel industry in the form of souvenir photography. The reality is that this is a company that makes sustainable profits and is going to significantly contribute to the bottom line of the group. As I mentioned earlier, we generate free cash of approximately 300 crores a year, and we don't go for acquisitions which are beyond our reach. In fact, if you look at all the acquisitions that we have made over the last 7 years, we have repaid all the debt that was generated by it in the very short term. The two classic cases are that we took out debentures, 5-year NCDs for 200 crores, all of which was repaid last year. We have some long-term debt on our books which will get repaid over the next 2 years, and we expect to be debt-free as early as next year, given that we will be in a position to prepay it. We are not stretched in any way. If you look at our leverage, we are close to 0.5 as leverage, which is reflective of our strong cash position.
Okay, fair enough, Mr. Menon. Hi there, good morning. You've clearly clarified on a lot of issues, be it the debt, your overall cash flows, your acquisitions. I wanted to get in just an update on the demerger with Quess Corp. Has that completely been done, or is there some sort of a timeline in place that you're looking at?
Yeah, so I'm pleased to inform you that the NCLT has admitted our application. The process is expected to be completed sometime in late September. We have been asked to get the necessary creditor approvals in place as well as shareholder approvals in place, which will get done early in August. My expectation is that the entire process will be completed as early as the end of October.
Okay. We are staring at what could be called as a dangerous slowdown, whether it is autos, FMCG, durables, even aviation. Now, travel is something which is aspiration related. You spend when you feel good, but Indians are not feeling good and great about what's happening to the economy and what's happening to their income. What is happening to your business?
So, I think if I look at the end of 2018 into 2019, obviously this industry has faced some challenges. First, with the cessation of operations by Jet, which resulted in a sharp removal of capacity from the market, and the market took some time to adjust to it, which resulted in higher airfares. But to be very honest with you, Nikunj, we didn't see any drop in our bookings during that period. And even now, when we look at our forward bookings, and you must appreciate we're at the end of the booking season, we are still about 8 or 9% ahead of our bookings last year. My expectation is that with the settling down of airfares and capacity coming back into the market through the second half of this year and the first half of next year, that things will go back to normal. Now, of course, I cannot predict how the market is going to react in the summer of 2020, when we will actually start seeing the first booking season after the slowdown was actually witnessed. As you said, it is aspirational. I hope that people will still believe that a holiday is a way to forget some of the anomalies in the market, and that they will be able to overcome some of these concerns.
In terms of growth going forward, and you mentioned that perhaps you don't have that visibility, but still to understand, can the standalone business, do you see the standalone business actually growing, let's say, in double digits in the foreseeable future?
Yes, I do. I just want to qualify a couple of things here. First of all, because of a high degree of risk management within Thomas Cook, we were able to sort of mitigate the impact of the jet cessation pretty well. We did take a write down in our books for the quarter ended March 31st. We did see some impact on our margins because of the rise in airfares. But we were able to start charging surcharges that came in from the airlines as early as June into our pricing. And therefore, I believe that while there may have been some impact in the current quarter, the reality is that, in the April, May, June quarter, the reality is we are back to normal trading. All our businesses, especially foreign exchange, the meetings and incentive business, are doing extremely well. The packaged holiday business, or the leisure business as we call it, has not done badly. As I explained, their forward bookings are still 8% above last year. So my expectation is that over the rest of the year they will do well. May not be all the way up to 25 or 30%, but definitely in double digits.
Talk about this quarter. During a silent period. I will not talk about next quarter because we are going through unprecedented times of slowdown. But I'm going to talk about 3-5 years. What are you planning? You've incubated a great business like Quess. Quess moves out of the company hopefully by the end of this calendar year. What would be the face of Thomas Cook 3 years from now? Would you be a pure travel company where you'll continue to acquire strategic businesses like you acquired in the last 2 or 3 years? Would you be looking at diversifying completely? Would you be looking at adding more verticals which are outside travel? What is the thought here?
So Nikunj, I would like to clarify here that we have been a holding company for one of the 2 holding companies in India for Fairfax over the last 7 years. So very honestly, that has not changed. We believe that Quess was a great acquisition and that it had matured to the point that it was to the benefit of both companies to spin off Quess into a separate entity. The recent acquisition of DEI as well as a minority stake in a startup called Ithaca are exciting acquisitions that we have made. Going forward, I've said this before and I'll say it again. When we make an acquisition, it's not done with a view to consolidation or integration of the acquired unit into our existing operations. We will continue to look at companies as standalone units because we buy companies based on our trust of the management, our expectations that they are sustainable in profitability. So whether we buy another travel company or we buy another operation, the principle remains the same, that the company has to be managed by its existing management, which must meet our standards in terms of ethics and integrity, and the business must be sustainable and exciting. And DEI definitely represents one such opportunity. Over the next 2 years, we expect them to enter some large properties around the world where they will provide souvenir photography services, and we don't see any demand abating there. So in my expectation is that a combination of the various travel companies in the group as well as the non-travel companies will contribute to our growth. And my expectation is that over the next 5 years, we will make some acquisitions. I hope that we will not do any more spin-offs, at least during this 5-year period. At the same time, we will look to consolidate our existing travel operations so that they're backed up by enough technology as well as a focus on providing experience to our customers.
All right, Mr. Menon, we'll leave it there. Thank you so much for joining us this morning and also taking us through all of those important clarifications for our viewers. Thanks so much.